And today I'm Andrei Shaftin, CEO, co-founder of Funnels, and today with me, three guests, and it's a good company. Phil Carter, founder and CEO of Elemental Growth. Kiril Makarov, founder and CEO of WebFunnels.club, and Sam Sabetti is a growth advisor and ex-senior product manager and AllTrails. Welcome, guys. Thank you for joining us. And do you want to introduce yourself a little bit?
Thank you. So I can start here. So I'm the founder of Funnels Club and actually also the ex-Zing coach, which is a fitness app. It will be relevant to current topic because I was responsible for the growth and can share my knowledge in this niche.
And I'm
Amazing.
spent about a decade as a venture capitalist and product and growth leader at a few companies, Ibotta, Quizlet, and Faire, and then started my growth advising and consulting firm, Elemental Growth, a couple of years ago. We worked with about 30 clients, all consumer and prosumer subscription businesses, including some in the health and wellness space. I'm also an investor in Ladder, which is one of the fastest growing fitness apps in the US right now. So excited to talk more about this.
Yeah, good.
Yeah, hi, I'm Sam. Sorry, go ahead.
No, go ahead. Sorry.
Oh, cool. I'm Sam. I spent several years in investing and then was at AllTrails, the hiking app, for about 5 years, and saw lots of fun stories there in terms of scaling startups from early stage to maturity. And then last year I left and started product consulting, and I've been doing that for about 9 months, and quite similar to Phil actually, and focused on consumer apps. So yeah, that's me.
Yeah, thank you very much. Really excited to have to be in this good company. So we're going to discuss today health and fitness category, the most one of the biggest category of the apps, and with like a lot of revenue and volume, and at the same time it's so competitive, so crowded category of the apps, and each month more and more new apps in the health and fitness category are rising and launching. And what do you think? What apps can do today to stand out of the crowd and to be like noticeable for users and to stand out?
Yeah, I can jump in and take that, and then I'd love to hear from Kiril and Sam as well. Sam in particular, given his time at AllTrails. So I've written a bit about how there are more than 100,000 consumer subscription apps in the App Store today across Google and Apple, but only about 30 that have achieved billion-dollar-plus valuations. And I'd say about a third of those have been in the health and fitness category. But it's getting harder and harder to break out as a new startup because it's just a category that has gotten extremely crowded. And with AI, AI has leveled the playing field and democratized software development, which means people are vibe coding apps every day, every week now, which is making things even more crowded. And so I guess to start at the highest level, I think one, you need a really differentiated core value promise. And so to give you a couple examples, I mentioned that I'm an investor in Ladder. Ladder's a weightlifting or strength training app. The key to their success has really been coach-driven group fitness lessons. And so they have these coaches who are influencers that they've been able to use to acquire users on channels like TikTok and Instagram. And so from an acquisition standpoint, they're differentiated because they have these really charismatic and compelling coaches who bring people into the app. But then those same coaches are the ones who end up driving increased retention because there's this group dynamic that keeps people committed and accountable to one another. So that's one example of differentiation. I think another one, I had Miranda Payne, who's the head of growth at Runa, on my podcast a couple months ago. And he talked about how, even though running is probably one of the most crowded categories within health and fitness, which is already a crowded category, what Runa did was they really differentiated around moderate or intermediate to advanced runners who are training for their next big race. So that might be a 5K, a 10K, half marathon. But that was a different use case than Strava. And so they really found this way to carve out that niche around, okay, I'm training for a marathon. I need a very personalized plan for my next race. And they got early traction by doing that. And of course, that ultimately led to the acquisition of Run It by Strava earlier this year. So those are a couple examples, but it just has to be a very differentiated product experience. And then you have to find some unique way of getting people interested in it through your distribution strategy.
Yeah, the examples. Yeah, go ahead.
Yeah, totally agree with that. I increasingly think it is, in consumer specifically, it is about community and like really being able to like actually see the community flourish online. Like, do you have naturally naturally like engaged Facebook groups that the company maybe didn't set up, but like some of your power users went and did that and have now built this like place and forum for the most loyal folks to conduct discourse and all that? Are there Reddit subreddits that are becoming almost as big as your like subscriber base because of that kind of like natural community? Like that's how I think about community. It's like these people want to chat with each other so much that they are going out of their way to kind of create these circles. There's a client of mine, Skylight. I was shocked at how strong this community became, and frankly, the team didn't really do much on that front to end up with this kind of community on Facebook that they have like 100,000 people or something. That's how I actually look at moats now in consumer, and they're super hard to build.
Yeah, interesting. Yeah, community is community is tough. Yeah, it's you need a special setup, a special like skills to build a community and community driven product. But it's like so strong strategy at the same time if you manage to build a strong community. Yeah. Kiril, what's your like observation on that?
Yeah, so what I observed for last year, or maybe last 2 years, especially for products who are acquiring users through paid ads, it's verticalization. So launching a lot of different funnels for different user segments and user goals, like, I don't know, Better Me, who run multiple funnels for weight loss, for gain muscle, for women and for men, or for seniors, for Pilates, for yoga, for calisthenics, for walking, for running. Same for Simple, who is originally a like nutrition app or even fasting app. Now they're driving towards to holistic health coach, and they already have not only fasting funnel but also Pilates, yoga funnel, walking funnel, and it's actually possible only with web to app quizzes, because it's very difficult to segment with app campaigns, and like this web to app quizzes unlock this opportunity to segment.
Yeah, it's like it's pretty noticeable trend that like apps going to like the more narrow segments. Like it's, I think that Phil mentioned that regarding with the Luna, so they target on the like specific marathons, and yeah, it's, I think it's like the same things. Yeah, cool. And Akio, did you prepare something? Yeah, for us.
I can share one document with you to probably also answer a little bit on this question. So actually, I have a big like a Figma board with my library of fitness funnels and fitness creatives. I will not go into too much details, but there are like different funnels in fitness niche, including ladder, including like Simple, Better Me, and so on. So just to prove my point regarding many different funnels for Better Me, there is like wall Pilates funnel, somatic workouts funnel, walking funnel, treadmill funnels, and so on.
Just to clarify, it's a web-based user acquisition funnel.
Yeah, everything is web-based. So that's why you can like build the separate funnel and match it with ad creative. You don't lose the traffic in the App Store. So yeah, and I would say that like it's not a trend, but the niche is so mature and so overcrowded, and there are a lot of repeatable patterns right now. So actually, if you look at each of these funnel, it will be like very recognizable structure. Actually, you ask a lot of different questions from users. Like I will show you a few examples. Like, so usually you ask about primary goal, your like desired body, your target zones, weight challenges, and so on. So you're asking about fitness goal. You're like asking different questions to assess the fitness level. Sometimes even input some like motivation and psychology. And finally, you are providing some like assessment. Sometimes it's like quick BMI assessment, or sometimes you're trying to predict when users will lose the weight. The only goal of this is to like to build the feeling of personalization. So users should feel that the plan is tailored to the user, and it drives the conversion in this niche. So probably we can keep this board to come back later if we will have some specific question about some elements.
One more question regarding like trends. So as you can see, some of like the majority of apps like still acquiring the new users through like Facebook, TikTok, and Google, and having like app campaigns and running more and more health and fitness apps, starting running like web to app funnels. What do you think? What else? What's the like more like growth channels, user acquisition channels the app is using right now, and what's the trends you see? For example, like influencers based channels like that, App Mafia, promotes based on the experience. Yeah, I think it's like it could be also a big challenge, big channel for apps. What do you see in terms of like growth channels and user acquisition channels is like rising right now?
Yeah, I want to highlight the TikTok and Shorts. Definitely, it's like emerging channel and quite promising with such players like AI, who used it to drive incredible growth for the last year. But back to the ladder, so it also works very well for them. Not only paid ads, but also a lot of organic shorts, or how to say shorts in TikToks. Works for ladder acquisition as well. So yeah, definitely it's one of the promising channel and quite new in this niche.
Yeah, I'm glad you brought that up, Kiril, because I was going to say Ladder has done the most sophisticated job of this that I've seen, in particular on web to app. And I can go into more detail. I have a Figma board I could bring up with their onboarding flow. It's a little bit dated at this point, but what they've done is literally break down every screen in the onboarding flow, which they do on web, and then they kick you out to the app store once you've completed the onboarding quiz. They have a predicted LTV model, so they can predict the LTV of a new user based off of responses to each individual question in that onboarding flow. They pass that PLTV number back to the ad networks, so they become very efficient at optimizing paid ad spend based off of responses to quiz questions. So they can say, ad network, go target more users like this who we know have very high LTV based off of which creatives we're using. But then also it helps to further personalize the core product experience once the user is in the app. Specifically, it helps match new users with the right coach and get them off to a good start, so that activation and trial start rates are really good. And they've gotten so sophisticated that they actually, we're going to talk more, I think, about trial strategies later, but they use a reverse trial. So you can start a 7-day trial on Ladder without putting a credit card or any other payment method down, because they're so confident in their ability to convert users that they don't need the payment method up front. And maybe if I can get my screen share to work here, I'll pull it. So this is what I'm referring to. They've got this organic social loop, which is their influencer coaches that are using TikTok and now Instagram in order to get high value content out there, but it's content that the coaches themselves are producing or other influencers in the fitness space. But then the highest performing content, the content that performs really well, Ladder will double down on that content with Spark ads or on Instagram with Meta ads in order to expand the reach of that creative, which drives more growth through a paid loop because they're just expanding the visibility of those ads. And so the combination of this hybrid organic and paid social loop has been really powerful for them. And it started on TikTok. That was the channel that they really cracked because it had the most upside. TikTok's a lot more volatile. It's not as predictable as Meta, but if you can really get it to work, there's a lot more upside because there's just less competition among apps who've really figured it out. But then they've moved that same playbook over to Instagram, minor changes, and that's been really effective for them. And if folks are interested, I'm happy to go into a Figma file where I can break down their onboarding flow in more detail, but at a high level, that's how their distribution strategies work.
Yeah. That is like a good example of quite unusual web to app strategy. So they don't sell a web subscription on the funnel, but as well redirect users to the app and get them into app experience and the first end with the workout experience with the coach, which is quite interesting. Sam, wanna add anything?
Yeah, on the are we talking kind of paid acquisition only, or just any?
Any user acquisition?
Oh yeah, yeah. I mean, we were lucky at AllTrails that SEO and organic was just this flywheel that kept getting stronger on its own. Users will come in, they'll go on a hike, they'll contribute reviews and photos about the hike, and they'll rate it. We then had structured kind of programmatic SEO pages, so like best trails in California.
Mm-hmm.
Those kinds of pages ranked very well in Google, and so yeah, we were lucky to have this kind of flywheel going from basically the earliest of days. And that is something that might not work for every company. I think you have to have this notion of like structured data content to then go and actually build into SEO pages and spend time doing the technicals around it. But yeah, that worked amazingly well for us, and I don't remember having to spend on paid acquisition in the first few years to continue growing double digits. So that was just amazing.
Yeah, it's a strong channel. Like it's less volatile in terms of compared to paid performance marketing channels. Yeah, and really strong. Yeah.
Yeah. And by the way, we already mentioned Rana. So as far as I know, from what I analyzed, this channel worked for them as well. So if they provide the personalized plan to prepare for marathon. So there are a lot of ton of pages for like marathon in Limassol, marathon in Chicago, marathon in London. So and all of them went to Rana. So I believe that everyone can adapt this strategy for their app.
Yeah, that's good. Guys who are listening on us today, you can ask your questions in the chat. So if you have any comments or questions, feel free to drop it to the chat, and we will cover that immediately. For now, let's jump to monetization. What's the health and fitness category is the big category with the fitness apps and mental health, women's health, and etc. So there are a lot of different audience and different monetization should be applied to this audience. What the trends or common things you see in the category in general, or in some segments of these categories is there like difference between these categories in terms of monetization strategy, like subscription plans, trial, not trial, and any other things? What do you see?
One thing I can mention, and I'm not necessarily seeing this in health and fitness as much as some other categories like prosumer yet, but you're starting to see it, is the impact that AI is having on monetization strategies. And more specifically, the marginal cost of serving a subscriber historically in consumer subscription broadly defined has been close to zero, right? Unless you have a hardware device like Whoop or Oura Ring, or you have a physical product that you're selling, like one of the meal kits, HelloFresh or Blue Apron, for example, the marginal cost to serve a subscriber has generally been close to zero. But with AI, that's changing because the underlying LLM costs are often non-trivial. And so as you have apps like Runa, for example, that are using more and more AI features in their product offering, you have to be mindful of those underlying costs. And so the implications that has on trial and monetization strategy are pretty significant. One is I'm seeing more and more AI native companies shorten their trial windows. So 7-day trial is sort of the norm for consumer subscription, but I'm seeing more and more companies try 3-day trials, or even shorter, although on iPhone I think 3 days is the minimum on iPhone, so 3 days become pretty common. Another thing I'm seeing is offering 2 different subscription tiers, basically a basic subscription tier that doesn't include AI features, and then a more advanced subscription tier that does include AI features with a much higher price so that you can cover those costs. This is outside of health and fitness, but Duolingo Max was the new AI tier that Duolingo launched in 2023, and that's exactly what they did, was dump those AI features into that higher price tier. Or then the third thing is actually layering on AI credits that power users can purchase a la carte on top of the subscription. So you pay for access through the subscription, and you get a certain amount of usage built into that subscription every month. But if you exceed that threshold, then you actually have to purchase additional credits, even if you're a subscriber, because they've got to be able to cover those underlying AI costs.
Yeah, interesting. Kiril?
Yeah, I think those are great ones. I think at this point, having a trial or a freemium experience is table stakes. Like if you're a company that doesn't at least try one of those strategies, it must mean that you're just like in maybe a completely different market. Like, I don't know, selling digital cars. I don't know what to come up with, but those are table stakes. Consumers just expect them now. And even when it comes to free trials, being opaque about it and being very, sketchy about like being able to cancel your trial, your subscription, that really rubs people the wrong way, more so than I think it did several years ago, because so many apps now do go and remind you about their, that you're in a 7-day trial on day 5, for instance. So I've seen this like transparency kind of started from Blinkist, just kind of ripple across the space more. I don't know, Phil, if you've seen the same thing. So yeah, that's one of the main observations I've had. Reverse trial I've seen less in consumer health and fitness. I think Ladder is really one of the only ones. But it is interesting to see how that kind of pans out. One thing that I haven't seen just yet, but is now technically possible, is being able to push users from the app to web checkout, given the Apple kind of laws that were loosened just quite recently, right? I don't know. I haven't seen anyone do it. Or maybe I'm missing some, but I'm just really curious to see who's going to execute on that and take advantage of it.
Yeah, but I saw that AllTrails have web campaigns that like direct users to web landing pages and with like web checkout. Yeah, and you did you experiment with that a lot, and with like different monetization?
Yeah, so we always had a web checkout because most users actually interface with AllTrails for the first time on web because of SEO. And so it always made sense to have a web checkout. And when it came to pushing users to check out on web for LTV reasons and margin and whatnot. The main thing we did was when we ran 50% off seasonal campaigns on the subscription, like 4th of July, here's 50% off. You have 5 days for the offer. The emails were sent with web links instead of app links. So when we launched the promo initiative, initially it was with like app links, because we were like, oh, the app's going to have way higher conversion rate. But we went and dug in the numbers and just saw the LTV differences or like just you couldn't ignore them. So
Yeah.
and it was within the possibility of the app store's rules to push these users from email to web.
Yeah. And you heavily use trial monetization in AllTrails. Was it like all the time, or did you experience like selling subscription at once, like or it was like, I don't know, the strategy to sell free trial first, and you didn't experiment with the switching to the subscription or any other like monetization?
Yeah, when I joined, we didn't even have a trial. We just had a straight like, hey, here's $30 a year. Like $30 a year is a pretty low price point for consumer apps in general, but even within health and fitness, it was always on the lower end. So we weren't too worried on that front. But when we did actually we actually removed a 3-year plan that gave you a 30% discount. That had poor LTV dynamics. We removed that and we introduced a 7-day free trial to kind of not lose the bargain hunters who were buying the 3-year plan. And 7-day trial was kind of what we went with. It worked really well out the gates. We spent a lot of time just optimizing that trial experience. So I mean, the number of copy and just visual testing we did on that one upsell screen, I'm probably going to forget like 60% of the tests because a lot of them didn't work. But boy, when we had a winning variant on that screen, it seriously moved the needle, because that's just where all the monetization came from.
Yeah.
Yeah.
Makes sense. Kiril, do you want to add anything?
Yeah, I would say that it's like different monetization now in app or web. It depends on the strategy. If you use web quiz with web checkout, usually monetization is not trial, because it's a little bit tricky to do trials and run paid ads, because usually Meta is finding users who convert to trial, but then they don't convert to purchase. So it's very tricky. That's why a lot of players who run web quizzes, they don't use trials. But there is an alternative. There is like introductory price with big discount for the first billing cycle, either it's weekly or monthly. And I would say that it's most popular pattern now in web funnels. But it's absolutely different in apps monetization. Usually there are trials, and sometimes there are like huge discount on annual subscription, but it depends on the target audience. If you attract a lot of users who want to lose weight and don't want to exercise, it's absolutely different users with very low motivation. So it's much like easier to attract them, but it's very hard to retain. So it's better to monetize with some like annual subscription plan with huge discount. And it's absolutely different if you attract like users who already exercise, but they need some better personalized plan and so on. So then you can charge higher and they will retain. So you can charge like monthly subscription. So everything depends on the target personas and the goal.
Yeah, thank you much. We have two questions from the chat. What do you think of ladder personalization, plan suggestion in the funnel before paywall? How much do you think the difference it make?
Yeah, I can take this, and I'll actually share my screen because I mentioned this Figma file, and so rather than just tell, I'll show because they're always worth 1,000 words. So as I said, this is a little bit dated, but I don't think too much has changed. So to start with, you've got TikTok and Instagram, UGC, and in some cases, paid ads. This is an example. They have a really fun and irreverent marketing team. And when Peloton launched a ladder competitor, they actually realized that dozens of Peloton engineers had been going into Ladder's app over and over and over again over the course of many months. So based on that, they knew Peloton was about to launch a competitor. And so they created all of these videos to launch immediately after the Peloton app went live, which got them a lot of positive publicity and needless to say, put Peloton in a little bit of a tough place right out of the gate. But more to the question, so this is what the flow looks like. You come in, if you come in through an ad that's specific to a coach, then they match you directly with that coach. But if you come in through a more generic ladder piece of content or ad, then you get put through this onboarding quiz. And so they ask questions like, do you already know which coach you want to train with? What's your primary fitness goal? How many days per week do you currently work out? How experienced are you with strength training? And then they have these intermittent screens that I would call motivational screens and social proof screens. So the motivational screens look something like this. You're one of us, Ladder is for people like you, already motivated and serious about fitness and strength training. But these yellow lines of text are dynamic, meaning because I said I was already somewhat experienced and already working out a few days a week, it says already motivated, serious about fitness. But if you were to say 0 to 1 days a week and I'm a beginner, then this yellow copy would look different for you. Similarly, with the social proof screens, they're pulling 5-star App Store ratings from Apple and Google Play Store, but the specific ratings that they are selecting depend on how you respond to these questions. And again, I can provide a link to my podcast if folks are interested. I had Greg Stewart, who's the CEO there, on the podcast, and he talked about this. They literally spent an entire quarter going through every single screen in a room together. Like they had it up on a whiteboard, and they basically audited every single screen in the flow and made sure it had to earn its place. And so this had a huge impact. Like this was transformational for their business, not just because it increased activation and trial start rates, but because it dramatically increased the efficiency of their paid marketing spend, which Greg talks about on the podcast. So doing this right takes a lot of work. It's one thing to just like throw it out there. It's another thing to do what Ladder did and really painstakingly go through every screen in the flow and get it just right. But if you invest that type of time and diligence into it, it can have a huge impact on your key growth metrics.
Yeah, thank you very much for sharing this. Really insightful. Let's go to the next question. Within the health and fitness category, which product types have shown the strongest growth driven by web funnels? Calorie tracker, period tracker, home workout.
I would say that some fitness apps like Better Me is huge among these niche like who run web funnels. So it's fitness app, and the biggest funnels like Pilates or calisthenics. But if you consider the whole field of health and fitness, there are also different diets and nutrition apps. So Noom, who launched one of the first web funnels, it's like good example of nutrition web funnel. Simple, also one of big players in diet niche. Who else? Like
mental health, ADHD.
In the mental health niche, there is Liven or Liven app with a lot of funnels around ADHD, anxiety, procrastination, burnout, cortisol, detox, and so on.
Yeah, I'm also wondering if maybe apps where having just a bigger screen is beneficial or I guess conducive to having a better product experience at times. Like again, I'm going to go back to the outdoor apps. Like when you go and build a map and a route on the platform, it's much easier to do it on obviously desktop than on the mobile apps. So I think that's like use case specific, and maybe that's a long tail of use cases. But yeah, sometimes your product just it's a better experience for certain things on web.
Yeah, understand. And I would say also Runa is a web for running. App for running also is like showing like strong growth in terms of like user acquisition and revenue. Yeah, what else? House for kids also category like ADHD for kids, something like this. It's also still growing right now. It's not so big as like as fitness, but showing like strong growth right now.
Yeah, I think we can follow up this webinar, and I can provide the link. I have the big library of different web funnels in different niches. So it's around like 500, and the last one document, it consists of 511 different web funnels in different niches. Majority of them are health and fitness. So you can find it on my LinkedIn.
Yeah.
The other thing I was going to say quickly on apps for kids is it's so critical to get that onboarding experience right with those types of apps, because the buyer of the app is the parent, but the user of the app is the kid.
Yeah.
And so setting up a strong emotional attachment with the parent from day one and getting their email address so that you can continue to communicate through them to them through email is so critical, because you're not going to have as many touch points with them through the product itself. And we've worked with a couple of apps, not in health and fitness, but we work with a couple apps at Elemental Growth that are parent purchased but kid used. Examples are Splash Learn in EdTech, Minnow, which is a streaming service for kids content, and then Poc Poc, which is sort of a children's Montessori game. And all three of them have had that challenge, which is like, how do you get parents really excited for the value that this product can deliver for their children, but then hand it off to the kids and still keep a line of communication open with the parents to keep them engaged and retained over time.
Yeah, good point. What's the main growth driver for health and fitness apps? This thing, like in terms of what conversion rates or like ROI in general. What would you highlight? Like, is it like at creatives working with a experiment with a paywall, checkout? I don't know, anything else?
I would say that, again, it depends on the acquisition channel, but if it's paid ads, so definitely it's at creatives. So the big players who run massive volumes, usually they have big creative production team and iterate a lot with creatives, even iterate a lot with top performers, testing different hooks and so on. So they have like right creative process, creative production.
Yeah.
I think is the biggest lever, even with like moderate onboarding, which is not very well, like, but not too bad. You can drive quite good volume just with good creatives. But if you don't have, because creative is like a targeting, so you just not only iterate like visuals, actually with current algorithm, you are attracting different users. So if you iterate with creatives, you actually iterate different target users who will come to your onboarding. So yeah, it's the biggest lever now.
I couldn't agree more. I think that's spot on. And with AI, the pace at which top growth teams are able to spin off new creatives has just accelerated dramatically. So I'll share a couple more things here quickly. This is from a presentation that I gave at App Promotion Summit a few weeks ago. So I've mentioned Runa a couple times, but Runa's growth team is now spinning off 400 new creative concepts every month, which is pretty staggering. And this is what their creative production process looks like. So They're using AI tools like 11 Labs, Suno, VO3 in order to generate creatives at accelerating rates. They have a monthly creative planning meeting where they map out the overall strategy and the brief backlog for the next month. But then they test new creative concepts every week, and they have performance reviews every 2 weeks. So it's this very rigorous process that they use for dialing in their creatives and testing and iterating rapidly over time, with AI providing rocket fuel to just make that process faster. And then one other example I'll give, again, outside of health and fitness, but this is Photoroot. They're one of the leading photo editing apps out there. And they actually found that when they launched their new AI photo editing tool that has this sort of automagical background removal, they saw their CACs go down so drastically because people were so excited about this new AI feature that it made new markets that were previously unprofitable for them, like Indonesia, Brazil, Mexico, the CACs came down low enough that they were able to expand into those markets for the first time just by leading with these AI-powered features. So it's a couple of examples of how both AI tools can be used to accelerate creative production, but also how leading with AI features in the ad creatives themselves often leads to higher conversion rates, which of course lowers all of your CPI, CPT, and paid CAC metrics, which leads to higher ROAS.
Yeah, it's like it's insane what the AI, how AI shapes right now, like the especially like ad creatives production process and accelerate the growth. There is like a couple of questions in the chat about the creatives. Are the 800 creative mostly static or video?
Yeah, I can answer that. So when I say 400 creatives, these aren't like 400 totally different concepts, but there may be like 100 different concepts with a bunch of variants each. And so the 400 includes subvariants, but they're not all static. Some of these are video concepts. Some of them are image concepts. Some of them are just text. And I'll include a link to that podcast with Miranda as well, because she talks a lot about this process in more detail.
Yeah. And I discussed it with like a bunch of the apps who running like more than 1 million revenue per month. They usually like runs like 1,000, roughly 1,000 ad creatives in per month. Is what is the test, and almost a third part of that it's like new concepts. It's the rest like it's just variation of these concepts. Yeah, and this is like a kind of like benchmark to keep growing. You need to iterate with the ad creatives a lot if you running like paid channels and performance marketing. Anything to add, Sam, Kiril, to these points?
I haven't had a ton of experience in the ad creative side of the house. I remember doing it years ago, and it was definitely not as scalable it is now. That's what I'll say.
But the initial question was like about like the main growth driver. So it could be probably monetization. What you can highlight in terms of like monetization experiments? Is it paywall, pricing, upsells? What would you
In general, I would say one that can take some time to build out and actually see the gains from, but is a very sustainable way to acquire subscribers, is coming up with the moments to surface your paywalls that most closely align with moments of pain and need from the user. So it's now become standard practice to present paywalls and during onboarding, which is something I think most apps should do. It's going to make you quite a bit of money, but a lot of times those conversions are not going to stick around maybe with the retention curve that you could achieve, as opposed to kind of letting the user experience the product, the freemium version, and then like I'll give an example from AllTrails. Obviously, if we saw that you are visiting a trail page, the same one 3 or more times in a 24-hour period, we would kind of infer that you're about to go hiking there, and we would pop up a small upsell just to say, hey, download the map. so you can use it for navigation.
Mm-hmm.
And so that kind of introduced this like moment of like, oh yeah, I'm gonna need that. Even better was when we tried to do that, and when they got to the trailhead, um, that was technically way trickier, but it was showing tons of kind of promise. So I'd say kind of intent driven paywalls are, I guess, one of my favorite ones to chat about.
Yeah. Thank you very much. Yeah. All right. And what do you think about like localization? What's the like how big role of localization in app growth in terms of like in the health and fitness category specifically?
Yeah, I could take that too. We again at AllTrails, we were initially just in English when I joined, in French, and I think it was Spanish as well. And then we made the big decision to move to 12 languages. Uh, we used automated tools to do that. I forget the names of those vendors, but the app itself can be quite easily translated.
Yeah.
We struggled a little bit more on the user generated side. I believe we used Google Translate to, turn an English trail review into whatever language.
Yeah.
And I remember kind of managing costs was tougher on that front when you have like millions of reviews. What we actually struggled with a ton was like really making the app feel local to Europeans, specifically the DACH region, Germany, Austria, and Switzerland. Like we were throwing the kitchen sink at making the app feel local, but I mean they are notorious.
You mean in terms of interface or what, or content?
Not even interface. I think we were struggling to want to change the interface by country,
Okay.
because that's just wasn't going to be scalable at the time. And it was really just like using the right words and the right terminology, and making it not feel, frankly, like maybe not feel too American. I don't know how to kind of
Yeah.
like kind of convey it, but it became clear. We did tons of studies, and like a lot of it came back overwhelmingly like we just prefer German made products, like, so we're going to use Komoot, even though like for hiking it's not as good. That was really interesting, and very nuanced, kind of Pandora's box.
Yeah, it's a good point. Anything to add, guys?
Yeah, I can speak to this. I mean, similarly at Quizlet, so when I joined in late 2018, international expansion was a huge focus. Quizlet already at that point had pretty significant penetration of the US market, but a big priority for us was expanding into Europe and then other markets beyond. And one of the advantages we had was, because we were a UGC platform, meaning people were creating sets of digital flashcards on Quizlet, we already had content in almost every country on the planet, but we didn't have a critical mass of adoption. And so one of my mentors, Ravi Mehta, who led product at Tinder, and then prior to that was the head of growth at TripAdvisor, he has this framework for localization. So he talks about, number one, just like launch the product in other markets, even if nothing's localized. Number two, like localize the Chrome of the product, meaning make sure that the navigation and the basic architecture of the website or the app is localized in the native language. Number three is content. So to the extent you're a content business, localize the content in the native language. And then finally would be build specific bespoke products or features for that market. But the reason he lays it out that way is it goes from like lowest effort to highest effort. So building an entirely new product feature for a specific country or region is really high effort. But once you are deep enough where you have enough revenue potential in that market, the ROI can be there. But early on, all you want to do is just localize it in the native language, which is often English to start with for US startups. So you can get a lot of value out of that, especially as a consumer product. So we really took that approach at Quizlet, and now with some other clients. We don't do a ton of localization work with clients, but when we do, that's what we encourage them to do, is start with the basics and get some quick wins and get the flywheel going, and then as you get deeper and deeper into markets, if there are 2 or 3 markets that are really strategically important, then you can roll up your sleeves and actually build higher value features for them.
Yeah, thank you very much. Kiril?
Yeah, I would add a little bit regarding localization, but from like paid marketing side. Sometimes you don't need like localization, but you already can go worldwide if you target English language. So it's usually the first step, and it's very obvious, but it like unlocks a lot of new geography for you. Many users who speak English. Then you can identify some potential markets and localize marketing assets only for that market first. Like, I don't know, for example, usually Germany or Spain is quite big, and there is some sense to localize to Spanish or Dutch. And this localization strategy is the question of the stage. Actually, at the beginning, sometimes there is no big sense to localize because there is a cost of supporting all that, and you will slow down a little bit all your experiments if you localize to many languages. So each new experiment will be very difficult because you should test for every market. But at some stage, it makes sense.
Yeah, makes sense. All right, thank you. And one more topic that I want to touch today is retention, because not all fitness apps and products like good retention, and it's always a struggle with retaining users on the health apps because it's like it's connected naturally with the habits, and it's so difficult to change this thing for people and keep them returning to the product and do the same things. And what do you think the the landscape of the apps in health and fitness and in terms of retention? What was the key driver for retention rate for these apps?
Yeah, I can say a few things. And I'm getting a little bit of feedback. I don't know if anyone else is. And I don't know if that's on my end, but hopefully we'll just push through it. So a couple of things. One is, I think it's important to recognize that retention is largely a function of use case. And obviously the better and more differentiated your product is, the more you can drive increased retention on the margins. So I know I keep mentioning my podcast. I don't mean to be overly self-promotional, but I happen to have talked to a lot of health and fitness founders and CEOs recently. And another one was Dmitry Gursky, who's the CEO and co-founder of Flow, which is based in Europe. I know, Andre, you know.
Yeah, I know.
Yeah. They've been tremendously successful, largely because of their retention rates. Their retention rates are best in class. They beat out all of these other women's health tracker apps because their retention rates are so high. But one of the things he said on the episode was, some of that is just the use case, right? Like a woman's period is something she can't avoid. And so that use case is never going to go away. And as a result, their retention rates are very high, but then they've invested all the money they get from subscriptions back into product innovation to muscle out all of the other competitors. So that's one really critical thing, is just choose the right use case.
Yeah.
And if you're building a fitness app like a gym, retention rates for gyms tend to be very, very low because people don't have the motivation to keep going to gyms, which means that retention rates for fitness apps are also difficult. Having said that, that brings me to my second point, which is the more you can find ways to differentiate your product experience, which I know I keep saying, but then also to build in some sort of community or group component, which Sam brought up earlier, that's really important, because that leads to a feeling of commitment and camaraderie and mutual accountability. And that's been a huge part of why Ladder's retention rates are so much higher than a lot of other fitness apps, because it's not a single player experience. It's a multiplayer experience with a coach and a group, and you feel accountable to that group and you want to show up and be part of a team. And so I think that's one other lever you can use to increase retention on the margins.
Yeah, it's just true. Yeah, so distant point.
Yeah, I think retention is the hardest metric to move by far in the funnel, and a lot of times it is. I think it's about getting the right subscribers. Like you can do things higher up in the funnel that triple your conversion rates really easily, but they might be very low quality users and subscribers. And so then like you're not going to see it today, but in 1 to 2 years, you'll see your retention rate starting to decline. And then you're like, oh, what do we do to drive retention rates? And sure, there's tons of I think best practices around cancellation flows and all that you can do. Those are only going to do so much. I think the crux of it is, are you kind of acquiring the right subscribers, and are you able to tweak that higher up in the funnel? And yeah, ultimately, whether someone retains or not, it's about the habitual use of the product and the product experience. Like, is this just my favorite app to open because it makes me feel good? There's so many emotional elements, I think, that come into play here.
Yeah, cool. Kirill, wanna add anything?
Actually, I will support the same take regarding that. Like, choose the right product and the right habit. But even in fitness, you still can choose. So, for example, if you do application like Rana, if you target people who are preparing for the marathon, it's much more motivated users than users who want to lose weight. So, yeah, if you're considering niche, choose the niche with higher potential to retain. But if you're already building some product in some niche, so then yeah, you can try to implement some like community elements, gamification like strikes and so on. But it's very hard to drive this metric.
Yeah, that's true. Yeah, it's just making me think about that. Probably like the most driver for retention is not like product, but like user acquisition and like the audience itself. But yeah, taking into account that if you mentioned like you can create not like single player, but with a like community, so it's like complex all the things. So you need to pick up right audience, right use case, and build the good environment for users to stick with the solution. Yeah, it's like so insightful. All right, so we don't have any more questions. If you want to discuss anything today, or any questions in the chat. Oh yeah, we have one more question in the chat. Is it possible to build a profitable funnel for health and fitness app in tier 3 countries?
Definitely possible. So it's like the question of the volume. So it will work the same like in tier 1 country, but the volume potential is much lower. Efforts are more or less the same. Competition is lower, but you still should experiment at creatives. You should still build the funnel and experiment a lot on the onboarding. So yeah, there are some pros like low competition, but after all, the number of efforts is it's low, but not so much low. And sometimes it's better to do the same in tier 1 geo. You can still experiment and test a little bit to lower your testing budget and use tier 3 country for that, but then use tier 1 for scaling because their potential is much higher.
Yeah, and you probably need to experiment with the pricing and monetization strategy. So
yeah, there is good example, for example, in mindfulness niche, where is Headspace and Calm, but for example, I can't remember the current position, but like a few years ago, Meditopia was quite high in terms of like number of downloads and installs, and the strategy was to go through tier 3 countries. I can't remember the first country for them, but it was something like Turkey or not US. And but the strategy was not on paid ads. The strategy was on ASO and organic growth. So it's a little bit different. So you don't need to invest a lot in like paid ads, creative testing, and funnel. You just want you can go to low competition keywords. It's a little bit different strategy, but yeah, it's definitely possible.
all right, so let's wrap it up. I think thank you very much, guys, for great discussion. Thank you for everybody who joined and for your questions in the chat. Hope you enjoyed. Thank you very much.
Thank you.